Good day, everyone. We have a Fed that is maintaining its dovish, relaxed posture, although it did switch its language in terms of its concern about the global economy. It reduced its wording from risk to we'll keep an eye on it. That said, the global economy does not look like it's doing much better. In fact, it might be doing worse. Bank of Japan decided not to add QE to their, or add additional QE to their mix. It kept negative rates at minus 0.1%, and that was a surprise to the markets that thought that the Bank of Japan would go ahead and relax and ease further. The yen, of course, is, I guess they're trying to prop up their yen because it's had a lot of difficulty. But the Japanese economy, with these negative rates, is not showing any signs of improvement. In fact, it's showing that it's continuing to deteriorate. So the negative rates aren't doing a thing. If anything, they're creating problems down the road, additional problems. So markets gap lower today on the result of that news, but they're climbing back. I think that the amount of QE out there that's still being printed certainly drives these markets higher. The price of oil and other commodities continue higher as well. Hard assets and equities do well with a QE-heavy environment. So the Fed basically stood at the ground on its overall posture on rates. They haven't really given much clue, but it's to be assumed that if the global economy recovers, then there gives them more room to hike, and if it doesn't, then they're going to cut off any kind of rate hikes. And the Fed futures continue to put the odds of a rate hike at the next couple meetings at under, I think under 40% at this point. I think the next one is at 20% or something. So very, very low odds. Those types of, that's a mind consensus aggregate of futures traders that are betting, making their bets, and so it has some reasonable accuracy, but only kind of on the higher end. So if the Fed futures says 40 to 60%, whatever it is, kind of meaningless. But when you're getting up above 70, 80%, then it's probably more likely to occur. Likewise, if it's somewhere under 30%, then the hike is likely to not occur. And right now, I think over the next couple of meetings, there's going to be no hikes, according to the Fed futures percentages. If you agree that anything under 30% is cause for a cause for suggesting that the Fed will not be hiking. So we've got a bunch of names that I wanted to go through that we put on the list at various times. The first one is SIMO, Silicon Motion, SIMO, and that one was added to the list on the 1st of March. And as you can see, it had an undercut from that date, a mild undercut, and then another pocket pivot on the 11th. So in other words, had you bought on the 1st and had you sold out of it because it wasn't acting as it should, I mean, obviously you're going to look at the market in context with that, and if you look at the NASDAQ, you'll see that the NASDAQ had a nice pullback over the next 4 days, whereas SIMO held its ground. So in other words, relative to the market, it was acting fairly constructively. So you may have actually decided to hold on to that stock. If you sold it, because certainly market pullbacks, and back then, we were all, the whole world was waiting for the market to roll over. If you had sold, then you could clearly buy it back on the 11th because it gives you another pocket pivot. If you don't want to buy all the way up there, you could have bought maybe on the 15th, where it pulls back for a couple days on light volume, especially on the 15th. And then it's off to the races. It's done very well in terms of price progress, but it's been quite volatile on its ascent. And today, of course, with the earnings being reported and the volume being appreciable, this is the kind of stock where at the open, where it had a mini gap lower, you'd be selling it. So you take your profits today because you don't know where this thing's going to go. And certainly it's had a pretty wild ride for 1 day straight. The next one, Fabrinet, FN. Now this one was added also on the 1st of March, and this is one that you clearly would have sold because it had a nice little correction. It also broke below the low of the gap up day, which was on the 2nd of February. That was the day that was due to the earnings, good earnings reports of gapped higher. But the rule is that it's traded generally 6 days after that gap up day. You sell it if it breaks below the low. You don't give it any kind of room to maneuver. None of this 1 or 2% under the low. So you'd be basically selling it under 27.34, and that would have been on the 3rd of March, or just undercut. And then it starts to move higher. We have a pocket pivot on the 24th of March to new highs, and this thing just keeps going. But then it has this nice pullback. The pullback was fairly orderly on high volume, and so basically, if you had decided that you wanted to get back into this name, you could have taken advantage, perhaps. It's a tricky kind of stock because you got on the 25th of April, you have another pocket pivot, and now it's pulling back. So maybe if you're still interested in the stock, you could buy this thing on weakness as it maybe comes closer to its 10-day moving average. Then we had an airline stock also put on the 1st of March. And this is one that was coming up through its 200-day moving average, and doesn't do anything wrong. It continues higher, but then you have a gap lower on the 2nd of April, which kind of knocks out a good part of your profits, and the volume is huge. So actually, was that a secondary? Just checking here. No, that wasn't I don't know. Yeah, it wasn't.
I think they bought out Virgin America Airlines.
Okay. So yeah, that's the kind of gap down that's not it's not a lethal gap down. So you could have possibly gone on to the position. Obviously, a gap down that has to do with something that has to do with the company's fundamentals is more of a toxic gap down that you want to just get rid of at the open. But you might have sold it anyways because the gap lower was in context with the chart. It was notable. And then you would be you'd still be in cash on this one because it hasn't really given any buy opportunities. UFPI, it's also that was put on actually on the 17th of March.
Hey, Dr. K.
Yeah.
I want to make one quick comment on Alaska Air. Is that if you look at this, let me get my regular pen here. I think we looked at this. If you look at this, you've got a big deep cup. So let me gotta erase these drawings here. You've got this big deep cup here, and that's very somewhat pod-like because you go straight down for like I'm going to say 1, 2, 3, 4 weeks down. You bounce around undercut, and then you head right back up to the highs in 6 weeks. So that's a very, very rapid ascent, and it's very pod-like. And so what happens is you create this cup with handle that's somewhat flawed based on the fact that it's a really deep cup, and you're not spending enough time consolidating this prior action, and that's basically where the flaw comes from. And when they came out with earnings last week, this morphs into a short sale based on a pod setup, punch bowl of death short sale setup once it breaks the 20-day line. Now, it originally broke the 20-day line here on the buyout announcement, but it was able to flutter around, and then going into earnings, if I'm trying to short this along the 20-day, then I'm using that as my stop, or maybe another % or two above that as my stop. So you get stopped out here, but once earnings come out and it breaks, you can come back after it here, and this thing's drifted down. It's undercutting this low down here from early March, so it may have a rally back up to the 200-day, but I think this is a short sale target where you're using the 200-day line as a reference point for any rally that comes up into the line where it might be reshortable. So anyways, okay, go ahead, Dr. K. Next one.
Yeah, the next one's UFPI, that's Universal Forest Products, and that was put on the list on the 17th of March. And this is, it was just, well, it was closing on new highs, not extended relative to the pattern. And then it has a pullback to its 20-day on the 29th of March. So that was your ideal entry point. Of course, buying it on the day of the block pivot, there was nothing wrong with that because again, it wasn't really extended relative to the pattern. It's still fairly close to its 10-day moving average. But you could have picked up more as it traded lower and traded at its 20-day. Now, since then, the stock has just kind of meandered back and forth, and then you had a big high volume reversal as a result of its earnings report. It's traded higher and then closed at the low. So on a day like that, you definitely want to be out of your position at some point during that day. That's a very bearish pattern, well, as you can see, it's not really doing anything since then. So essentially, you would have probably closed this trade out at a small gain or a small loss, depending on where actually, you would have closed out with a small gain in either case. But that one turned out to be a dud. As you know, it's always a numbers game, and you gotta, if you can hit one home run, you can have a lot of duds and small losers, small gains, and those don't make much difference to your portfolio. But that one home run or a couple double hits can make a nice difference, especially in this kind of market environment. We had another one we put on in March. That was March 1st, Orly, O-R-L-Y. And that was basically the type of stock that, again, you want to buy these on weakness. Sure enough, Orly went back down to its 20-day moving average, so you're giving an optimal buy point there. You could also use the 10-day. Just obviously would not get as good a price, but that's all contextual. In other words, if this is a really powerful stock, the market's acting well, then you might use the 10-day. But if the market's kind of dragging along, then you might want to give this some more room with the idea that you can get in at a better price.
Hey, Dr. K, on this one, I think this was flawed from the start. If you look at the weekly chart, you get it's basically this deep sort of cup, and you got wide ranges down along the bottom, so there's no real tight action. It comes up, and you're actually wedging. You can see on the volume that the volume is very light as it's coming up the right side. And so, I mean, putting it on a breakout to me seems like just begging to get hit on it, because breakouts in this market rarely work, and this one's been a long-time leader, so it's had a big move. So I think this one was flawed from the start. That's my take on it. So if you bought into it and it's breaking, it's gap down today, then you're just gone. So, but I think it was flawed. That's just my view. So.
Yeah, basically, this is one that is, again, we always encourage people to buy on the weakness. So if you bought this one at the 20-day, or even the 10-day, it didn't really go anywhere, but you would have closed the trade out probably at a small gain or a small loss. Also, the fact that it wasn't really going anywhere, you wouldn't have waited till today. You would have bought it on a pullback to the 10 or 20-day, and you probably would have sold it in the next few weeks, because as you can see from the pattern, it's very resistant to really moving to new highs. A proper base would have the stock rushing to new highs. So you would have probably, if you're smart about it, you just take your profits on this one and move on. Because you can see that relative to the NASDAQ was chugging higher during this period. And so when you see a stock dragging like this one was, it's kind of a warning signal that either at best you're going to underperform the market, or at worst you're going to be sitting in it on a day like today where it's gapping lower. So yeah, anyway, it's a good lesson in terms of sizing up a stock relative to the quality of its base and also relative to what it's doing relative against the major average, in this case the NASDAQ. And TSI is the next one. That was added on the 4th of March, and this one was a double bottom with a break through the midpoint of the base. Then it shoots to new highs the next day. Then it has a sharp pullback. Now this is a semiconductor stock, and they tend to have these sharp pullbacks. That's just the nature of them. That was the nature of them in the 90s. That's why I found that it was difficult for me to play these compared to a lot of the more smoothly generating patterns. Certainly in like .coms and those sorts of tech names. But nevertheless, with this one, buying on weakness was a good idea, because then you're buying very close to the 10-day there. Has a nice sharp pullback there, and then it's going to new highs, but it's not really convincing in its move. It's a bit reluctant. So again, there's another one where as it rolls back over, and basically it hits new highs, goes to 45.46, and then it rolls back over. And that's weak. It's generally weak action in the face of the market moving higher. So in that case, you could just book your profits. You sell it maybe on the second or third day. The second day off the top would have been on the fifth, or the third day. So then you take your profits, which depending on when you bought it on a pullback, you take your whatever. What is that? About 6%, 7%. Now we have HWSC. That was one we added in. That was also early March 4th. Yeah, that was another result of earnings, a good earnings report. And here's one that had a mini gap high.
What was the symbol again?
SWHC. SWHC. Smith & Wesson.
Oh, SWCH. No, SWHC. That's right. Okay. I thought you said AC. Yeah, this one had a nice move. I mean, this one had a great move from here. And I think, once you had a 15, 20% profit there, you had to take it, and that was it. And that's all you get with breakouts in this market. And then once you had this breakdown, you're gone, and then it turns into a short here. Anyways, carry on.
Yeah, what's nice about this one is that so you get your move to new highs on the strong earnings, and then a pullback. So it gives you the entry point, buying closer, well, actually buying right at the 10-day, kiss the 10-day basically, then it moves higher. And then at the peak here, you have a high volume reversal, or let's just say it's a high volume, above average volume reversal closing at its low. So that generally would be your exit point, especially in this kind of market environment where you want to take your profits when you've got them, especially, this is a nice move in a short amount of time. We have another semiconductor stock, SMCI, that we put on. This was also on the 4th of March. And this one had hit new highs, and so is that right? Oh, the 1st. Let's see, the 1st of March. There we go. All right, so we put it on the 1st of March. And then it has a fairly sharp pullback. It is in the nature of its pattern to, you can see that when it makes a move, it tends to have a sharp pullback. But there would be nothing wrong with having sold it out at some point during that day, because that was a pretty big move relative to the overall pattern. And then it doesn't really give you any entry points, and you're just out of stock. So, that's an example of, you're buying it doesn't work out, it pulls back too sharply. I mean, we want these things to pull back constructively to their moving averages, and this one just trucks right through its 20-day average. So, and the volume wasn't big, so that makes it a bit tricky. But again, on a price basis, as it started to move below its 20-day, you want to be out of the stock, because now it's below the low of the pocket pivot day by some measure. So something's not right with the pattern, and then as you can see, it just kind of meanders higher, pretty lackluster in the face of the market that's been moving higher.
Can I also say something, Dutch Cat? This is kind of a junky name. I mean, it's a little small, junky semiconductor. It's weak in the pattern. You got all this overhead here on the left side of the pattern. So I think, if these things are going to work, they're going to work. And when they start to waver, like if it's a pocket pivot, I guess here near the highs, and it's going up a little bit, but there's no volume here as it makes new highs, you're just selling into that. You know, you're not sitting around waiting to get your head handed to you, because you can feel when these things get a little bit too obvious, and they're just not making enough progress. And I think that was the case with this one. If I had bought this, which I don't generally buy stuff like this anyways, too thin for me, I would have probably sold into the weak rally on light volume. So anyways.
Yeah, that was your other selling point. I mean, the first selling point really is when it's just not working out, and you want to keep your losses to a minimum. So on that pocket pivot day, it undercuts the low of that pocket pivot day, and it goes through the 20. I mean, I would say, you know, your selling point should be when it moves below the 20-day by, you know, 1% or 2%. You know, again, relative to the pattern, as it looks like it's not working, just stop your position, because you know, you really want to manage your stops in a highly constructive manner so that your losses are contained to stay within, you know, a couple to a few percent maximum. That way, when you do have a stock that gives you 8 to 10%, it counts, because you're not keeping your stocks loose, where you're, you know, selling and canceling away, where, you know, you're waiting until 8%, 7 or 8%. In this kind of market environment, you'll be spinning your wheels at best if you're giving the stocks that much room. The next stock, EBIX, that was added on the 17th of March, and this one could have been bought on that day because it's, as you can see, it's right at its 10-day. But then, as you can see, it undercuts its pocket pivot a few days later. It's not a cardinal sin here, but and then it moves higher. But as you can see, this pattern is pretty lackluster. It's not really getting much of a move. And then really, I think the straw that breaks the camel's back is on the 4th of April, where it moves to new highs, then it reverses, closes near the low of the day on volume that is above average. It's not huge volume, but nevertheless, it's not a positive sign when taken in context with the overall pattern. It's just not keeping up with the market, and it's also small cap names. So you want to obviously handle with smaller cap names in this environment with kid gloves. So you'd be out of the position on that day, and you would have netted a very small gain, maybe, I don't know, what is that, 1% gain, but at least losing anything on this, because you don't want to wait for it. You know, it comes all the way back to the 50-day, and then it finally makes. Then you have a pocket pivot on the 13th of April, and then it has a constructive pullback, sort of close to the 10-day. It's a tricky one because then it has this gap higher, and then it's moved higher since, and it's been acting very constructively. So you know, it's not an easy one to play. You know, you might have bought it on the 14th on that mild pullback after the second pocket pivot. But you know, it all comes down to market context. Does it get close enough to the 10-day in your view, or do you think you're going to be able to get it closer to the 10-day, or et cetera, et cetera? So. And then on the gap up, certainly, you know, you could say, well, it looks like a viable gap up, so I'll buy it on, that would be the 15th. And then you're just sitting in the position, because right now it's not doing anything wrong. It's getting tight right into its 10-day moving average. And if this market goes higher, and this is a small cap name, these things can, you know, the small caps in this balance have been doing, they've been outperforming, so they're trying to catch up to their underperformance from several months of underperformance. So, you know, this one could continue higher in nice jumps. Let's see. The next one. Let's see. Okay. We got MXL. And here's one that is added on the 16th of March. It had a pocket pivot breakout, but again, you want to buy these on weakness. So you could have bought it the next day, but then certainly on the 24th of March, this thing gap lower, and you would generally you want to keep your stops tight, like I said. So you would just probably be selling it on that day, and it goes all the way back to its 50 days. So you know, these things can move out of the worst position as it moves lower. Let's see, SEDG, that is something we added. That's the solar edge on the second. And here's one that I never was real crazy about these solar stocks because they really failed to make any kind of consistent moves for a number of years. And you can see the pattern prior to the pocket pivot is pretty loose and erratic, and it never really makes any kind of move. I know some people like the solars, and if you get lucky, if they happen to make a move, great. But this one still just it wasn't going anywhere, and then it just kind of rolls it back over. So again, you buy this one on weakness right around say the 50-day, and then when it shows it just meanders around the 50-day, you might as well just be stopping the position because it's not moving along with the rest of the market. Eli, E-L-L-I, Eli May. That was added on the 29th, and that was a pocket pivot breakout. And sure enough, it pulls back to its 10-day, then its 20-day about 2 weeks later. The pullback was on moderate volume, but still below average. So you might have taken a shot there, and then since then it's trying to go higher. This is, as you can see in the pattern, it's not a real fast-moving stock. Although you could go back to last year, and that actually had a pretty good move where it didn't violate the 50-day at all, and it actually doubled from 40 to 80, 40 and change to 80. So if you're sitting in a position on this one, it could certainly maybe repeat that, especially should markets continue to rally. Facebook, that's an interesting one. We put that one on the 29th of March, and again, this base just doesn't look right. We talked about it last week, and you buy these on weakness, of course. So if you bought this at the 20-day, it doesn't do the right thing, and on the 8th of April, you're out of the position because then it's breaking below the 20-day with force. And so then you just you sit out the position basically, and unfortunately these are to have held through that and enjoy the gap up today is not realistic. We did put it on the list today. It looks like this is technically one of the leaders. And we'll see. I mean, what I like is that the range of the day is fairly tight, and your risk in buying this, giving it 1 to 2% porosity is less. Should the trade not work? In the past, when it's had gap ups, it can do either or. It's not particularly consistent. I think it has to do with where the market heads, because this is institutional stock. The market cap on this is 340 billion. So should the markets go higher, this will probably get dragged higher with it. Let's see, CNN, that's Cantel Medical, that's added on the 30th of March, and here's another good example of this one. It has its uptrends, but on the day of the pocket pivot afterwards, it pulls back to the 20-day, and it's just not going anywhere. It's dragging. Here's one that you probably just sell. It's not working. I mean, a good stock will be like that other one where you're sitting on a nice 12% profit or more in a matter of several days or less, because it's certainly going higher. And when a stock's dragging like this one is in the face of the rising market, then it should be tossed. WebMD is one we added a day later. That was on the 31st of March, and that was a gap higher. Then the problem is that it undercuts on the 12th of April, so you would not give this any wiggle room. You just sell it on that day, be out of the position. And it did give a pocket pivot on the 25th of April, so you could have bought it after that pocket pivot on the pullback to its 10-day. As you can see, for the next 3 days, it's hit its 10-day, and now it's higher. So then you'd just be sitting in this position. It looks like it's you know, in some form of a reasonable uptrend. See, GoDaddy, that's
They've got earnings coming up too, so.
GoDaddy does. Okay. That was added on the 2nd of April.
That's a short.
And yeah, this does not look good. Well, it's actually added. Yeah, it's on the first. The first was pocket pivot, and then of course when it gaps lower, you of course want to sell it on that day. So you're out of position on the 5th, no questions. And it looks that this is a very sloppy, loose kind of price volume action, and it's you know, it's meandering. It hit the 50-day today, and now it's backtracking. So yeah, it looks kind of painful. It looks like there's going to be some shorting opportunity in this one at low risk. Basically, if you shorted right around the 50-day, then your cover point would be just above today's high.
Yeah, and you might want to get out, hopefully looking for a move to the 200-day down here at around 29 before earnings. So.
Yeah. ISRG, that's Intuitive Surgical, that was added on the 2nd of April. And that, well, again, the pocket pivot was on the 1st. And what I like about the first, the pocket pivot on the 1st was that, well, it closes at its high, and it's off the 10-day, it moves off the 10-day. So you could actually use that in the context of the chart. You could buy it the next day. I mean, it actually pulls back a little bit, but you don't have to wait for it to hit the 10-day, because that's a nice outside pattern on above average volume that it displayed on the 1st. So again, it's context. This is a powerful pattern. You don't have to wait for it to trace all the way back to, you know, it's 10 or 20 day in this case. I'm just buying it, you know, certainly taking advantage of that minor pullback it had on the 2nd. Then it's just meandering back and forth, but it is somewhat constructive. The volume is reasonable, and then it has a gap higher on a strong earnings report. That's on the 20th of April, and I would be selling this one 1 to 2% porosity. So you'd be out of this one 2 days after. So it'd be on the 22nd. You would have sold this one, and you'd be sitting on yeah, pretty well, reasonable profit in a short amount of time. Let's see, how many left are these? We got another airline stock, HA. This was added on the 5th of April, and this is it has a pullback to its 10-day on low volume, and then it moves higher, like it should. But then you have this day here on the 21st. Where I think there was an issue with the airlines, so that it sells off on well above average volume.
Well, they came out with earnings and they blew apart, but I think this also illustrates that, you know, continuation pocket pivots when you're extended 10% from a base or more, and in this case you're extended like 20-something%. I don't think they're things you want to buy in this market, and I think you see over and over again with these names that if you react to the strength, you're just getting sucked in. But it doesn't mean that the name is necessarily a bad one to play. I think the idea, though, should be to, yes, you see the strength here, but then you want to be opportunistic and look for a pullback to buy into, rather than saying, oh, here's a strong move, so let's just pile into it. I really don't think, Dr. K, that you can look at any of these in the same old orthodox manner. You know, it's like, oh, well, it broke the 10-day, so you'd be selling it. And then, yeah, once you sell something, it'll turn around and go higher, you know. So this one, I think, was just extended, and I think if you're following the general rule of buying pocket pivots on a roundabout, like down in here, or at least getting it on the breakout, then you're at least up on the stock, and then you'd be looking at selling it up here, not necessarily adding on a continuation pocket pivot. Now this thing looks to me like a bear flag, and it looks like a short. We also saw Alaska Airlines, so the whole group is weak, and I think that is meaningful in terms of a short theme or a thematic basis for shorting airline stocks. So if it rallied to 45.82 at the 50-day, that would be your best short sale point, but it may not get that high, so the alternative then is to, you could hit it here and use that as your stop. Anyways, go ahead.
Yeah, I was going to say that what I do like about continuation pocket pivots is that you are in the middle of an uptrend. So in this case, you get an extra 10% as it, from the time let's say you bought it as it came back to the 10-day, and then you're selling it as it's rolling over. On the day I mentioned, when you had the above average volume, that was the day before the earnings were reported. That's the other issue, is that it's reporting earnings and it's not acting right on the 21st. So you're out of it. You basically, you could sell this thing and take your 10% profit, and that's pretty good in this kind of market environment. So you're taking advantage of the momentum of the continuation pocket, and you don't stick around and wait till the 22nd when the stock has a big downward move, because it is earnings roulette, as we discussed, and you're sitting on a 10% profit with a stock that's not acting right. You want to get out of the position. And again, in this market, 10%, that's fantastic, especially in this time frame. NVIDIA, that's one we originally added on the 6th of April. And that had an upside high volume reversal closing at the high of its day. So it could have been bought then or the next day on a mild low volume pullback. And then since then, it's not doing anything particularly wrong. It looks fine. We mentioned it yesterday. Yesterday had another pocket pivot, and so keep in mind it's a semiconductor. So if this makes a nice move to the upside, you want to keep your stops tight because they have a tendency to have pullbacks that are fairly sharp.
Yeah, also keep in mind this thing's probably 15% extended past the breakout point. So here's the buy point right here in the middle of March, and it's run up since then. Earnings are coming up, I think, in the next first or second week of May. So if you bought the same anywhere in here and you're up on it, you might think about taking a profit into earnings.
WB was the next one. That's the Chinese company Weibo. This one was added on the 6th of April, and as you can see, of course we want to buy on pullbacks, but sometimes, as in this case, it doesn't give a pullback. It just keeps going higher, and it's an odds game in this market. And odds are that a lot of these names, most of these names are going to pull back to their 10 or 20-day moving averages before they go much higher. That's what we've observed, at least. And this one doesn't really pull back to its 10-day until about a week, almost 2 weeks later. And then it has another, it just keeps going higher. So it's a tough one to catch, this one. I know that some people, they still like to buy on strength in this market, but the only issue is that you're buying on strength. So if you bought this one, then you're seeing a nice profit so far. It's about 20% profit. But on the other hand, I would question how many stocks have you bought where your losses in the stock that didn't work out were, say, 5 or 6% or more, versus someone who bought on a pullback to the 10 or 20-day who was able to get out of the position at a break even or maybe a 1% loss. And those losses do add up, and so you want to keep the risk as tight as possible in this environment, and basically you baby step your account forward, which over a period of several months can be a nice gain. Alta was another stock that we added on the 8th of April, and here's one that had a mini gap higher, so it could be bought on a day, mid-bar close, and so far it's not doing anything particularly wrong. It looks fine. LNX, that's added on the 13th, and this is a semiconductor stock. As you can see, it breaks below the low of the pocket pivot back into its base 2 days later. So you've got to keep the stops tight. You probably would be selling it on that day, or you would have actually been, maybe you bought it the next day when it pulled back to its 10-day, and then the day after that, when it breaks below the low of the pocket pivot day, then you're out of the position because something doesn't look right with this one. And then certainly on the 19th, this thing just breaks below the low of that whole short basis structure. EDU, that was added on the 13th of April. Sorry, 19th of April. second here. My computer, the Wanda, is taking its time. Let me go to my other graph. So EDU is what's going on here? Okay, on the 19th we added this one, and as you can see, it had a gap higher on good earnings. So you want to catch this one as close to the low as you can, the 5 gap a day, because as you can see, when we added it, it wasn't up nearly this high. It was still in buying range, and then it moved, had a nice move higher, nice close on the day. So again, you'd be sitting on this position. If you bought it when we put the report out, nothing to do, just sit and wait for it to do something wrong. VMC is Vulcan Materials. That's also added on the 13th, and this is reversible, high volume upside reversal, and so you'd be buying it on that day, and then it's not doing anything wrong. Looks good. VMC. So then the next one is JBT. JBT. That is John Bean Technologies. That was added on the 19th, and that was a gap higher, and then it violates the low of that gap up on the next day. So you'd be keeping your stops tight on this one, and you would not also be sitting on it through earnings. That's a bit of earnings left. It's also not acting right leading up to earnings. So the price volume is weak on this one. The volume is large, and these days are lower each day. So you wouldn't wait for the earnings report to come out. And then let's see, and C5. That was one we just added. These are just recent adds, and so we're going to just have to see how these all materialize. 5, VMTV, Facebook, etc. And with that, I will turn it over to Gil.
Okay, what you've been noticing lately is big stock NASDAQ names have been getting hit. So over the weekend we put out discussions of Netflix, I believe, what were the other ones? Microsoft and Google. Is that right, Dr. K? Did we put out this? And those all came, they had little rallies. For example, Google had a little rally into the 50-day line and then broke to the 200-day line. So there's a quick 2-day short trade if you're going to work it, but you get a nice bounce and it may be shortable in here again. So I think some of these big stock NASDAQ names, money is coming out of them, and where it seems to be going to me is into stuff stocks, and you're seeing a lot of roundabout and bottom fishing type action in stuff stocks, but I'll get to that in a second. Microsoft gap down. To me, that's a shortable gap down, so you get a little rally on Tuesday up into the highs of the gap down range, so basically working it in reverse, like a Bible gap up except in reverse, and it breaks down to the 200-day line. And it's actually moving lower today, even in the middle of all of the strength. So that, I think that's fairly fascinating. Netflix, you're looking for a rally. I notice as you're coming down, okay, that you could look at as a shortable gap down if you're quick enough. Once it gets to the 50-day, you could hit it there, and it's continued lower, and the volume though is drying up. You can see that over here. So this looks to me like it needs to rally maybe up to the 10-day line at 97, or the 20-day line, which is 98 and change. So getting into that 97, 99 area, I think you're looking at rallies that I would be looking to short on those. Starbucks is another one. You had a shortable gap down here, and then you get a rally right into the 200-day line, and then boom, it breaks to a lower low, but now it's trying to rally. I'd watch this one also for rallies up into the 200-day line, where it could become shortable. So I've noticed lately you're seeing, the metals are doing well. I actually have a position in this, bought it yesterday. Off the 10-day line, you had a Bible gap up here, and it runs up and pulling in and turning higher. So I like the metals here, and I'm trying to decide if I'm going to sit with this or how long or what I'm looking for on this, because you have silver breaking out and it's continuing higher. So it had this gap up move, and it's continuing to move higher. And if you look at gold, though, gold has just been sitting in a base. It's like, silver's taking off and gold's just sitting there lounging around saying, yeah, you go ahead without me and I'll catch up. And maybe that's what it's doing today. And it looks pretty decent from here, I think. Like it wants to break out. So I think the metals look like they're going to go higher. To me, the Fed meeting, the Fed babbles about, yesterday they babbled about the same old stuff, hemming and hawing and talking about how, oh, employment looks good, but that's a bunch of baloney because most of the jobs are manufactured by statistical massaging and adjustments. And then the real jobs that are being created are actually what during Reagan's era they used to call MIC jobs, which are just part-time or retail sector type jobs, either in the food service or other industries where they're low-paying jobs. They're trying to make them high-paying jobs by mandating higher minimum wage, but I don't really think that's going to cut it. But the way I read it, it's like they're not going to do anything until later on in the year, and I don't think they're going to do anything. And the Bank of Japan sat there and didn't do anything because how much more can you do once you've taken rates negative? Unless you, I think what they ought to do is just send the army out with guns and point their guns at everybody and tell them to start spending, or else they're going to be shot because they're enemies of the state. In other words, you're leaning towards the realm of financial fascism when you see that sort of stuff. So I think the Fed is Japan is sitting still because how much more can they go without becoming financial fascists? And the Fed is yet to go in that direction. And the question is whether they actually do or not. And I think that's what you're looking at. So the message in gold and silver has been on the precious metals and stuff stocks and oil going higher, that maybe that's what's happening. The utilities index is very interesting because it can't make up its mind. You notice you have the breakdown through the 50-day last week, and then of course we're back above the 50-day. So I don't know what big run, so maybe it just got a little scared and has decided that okay, I guess interest rates aren't going up anytime soon, and I think that's what you're faced with. So what am I looking at on the buy side? Well, let's look at Facebook right now. Dutch K, do you want to buy this Bible gap up? Yes or no?
I would take a shot at it because the risk in buying it at this level is very small. Also, the thing about this being a super cap stock, the range on the gap up days of these names often is fairly tight. But the way we're already a few hours into the trading day, a couple hours of trading, so it looks to be certainly the risk in buying it here is that it could go lower below today's low. But often these things trade fairly reasonably tight. So you could keep your risk managed fairly well in this one.
Well, the low is 118.62 on the day, and you're 119.07 offered right now, 06, 08. So it's hanging around 119. So you're relatively close if you took a shot at it here. I'm kind of hanging back. I've been watching the 620 chart this morning pretty closely, and this is what it looks like right now. Let's make it a little bigger for all of you to see. And you can see that you actually had a sell signal. So if you're really tricky, like I am sometimes, sometimes too tricky for my own good, but that's another story. You get a sell signal here, a 620 sell signal right here, and it does kind of break lower. The question is, where would you get the short off, at 119 and change or 120 and change, and probably I'm guessing somewhere closer to 119.50, so it's not like you'd be making a fortune short the name. But I'm watching this as it settles in. You can see the volume drying up. So as it's pulling in, you know that your low is 118.62. I don't know if it undercuts. Is that right? Was that the low? Yeah, 118.62, and that occurred about about a half an hour, a little 45 minutes ago, I guess. So you're settling down. People are going to sell into the name. I think you'll have some funds that have been big in the stock for a long time might sell down their allocation so that they don't have as much, I guess. I don't know, because it's up 10%. So if they're brimming with the stock, they could sell some into that just to pare down their position, as they're oftentimes required to by their charters. A lot of institutional investors aren't allowed to have positions that exceed a certain percentage of equity, so they might be selling into that. And so you're just watching to see where that settles down. So I'm just watching it on my 620 chart. You can see that the MACD lines are kind of flopping around. They don't really know which way to go. Maybe this is going to retest here on low volume. So I'd be watching it down in here as it pulls in. If you want to be a little more clear cut and concrete, I suppose, if you're oriented towards that sort of approach, and you need to see the signal. Then what you're looking for, if the MACD holds on that with the orange line above the let's see, can I get this thing to move higher? There we go. With the orange line here above the blue one, okay, right there. And this line, and you see this yellow line turns above the blue one, and you get across here, then maybe that would become a buy point. So, but we'll see. So I'm kind of watching, see how this plays out. So in real time we can kind of check it out. Maybe it fails. You know, maybe it continues lower into the top of the base or something, which is around what? Let's see, 117 and change, I guess. So yeah, so you know, maybe it comes in there. I don't know. I guess we'll see what happens here. I was looking around this morning. I actually traded this one, pot, and I was using my 620 chart on it. It came up off the lows early this morning, right off the opening, and turned. So you got a buy signal. And I've been watching this thing for the last few days, and I messed around a little bit with it, and it seems to have had a bit under it earlier. You can see you had a pocket pivot here, so that kind of pushed it higher, and now it's trying to hold the 50-day on the pullback here. But once I got this cross, if it moves from here to here, that's a pretty decent move. And once I get this cross, I'm going to back away and now watch and see where it comes into. But you're seeing a lot of, like, does anybody remember this one? Bungie? Look at Bungie. Is that a viable gap up? The low is 61.87. We're trading 6279. What do you want to do? You want to buy it? Is it, maybe it's viable? I think they just came out with earnings. So here's another one. Archer Daniels Midland. Here's another blast from the past. And these things are low in their patterns, you know, but it's thematic. So if you have the idea that the Fed is on hold forever and they're going to keep interest rates low, maybe they're going to even go to negative interest rates. The economic data the last few days has not been that impressive. GDP growth came in below what they were looking for. And you got to remember that GDP probably was negative. If you figure in the, what was the last inflation report, the CPI, they said was up 0.1%, so 0.1%. That comes out to 1.2% annual inflation. Try not to laugh because anybody who goes to the store knows that 1.2% does not accurately reflect the current inflation rate for people who live in the real world. Now, as far as the statistical world goes, the Fed manufactures 5% or 0.5% of growth, and then we're probably negative if you figure inflation is really 3 to 5 to 8%, depending on who you talk to. I think nobody with any sort of experiential wisdom in the real world would tell you that inflation is less than, say, 3%. So, you know, that doesn't really add up for major economic growth. But the Fed constantly talks about, oh, things are improving, blah, 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 but we got to keep rates at, you know, nothing. But I think they're eventually going to reverse them. And in that process, I'm seeing these stocks start to rally. And meanwhile, you're seeing the big stock NASDAQ names roll over. So thematically, what does that mean? Well, I think maybe you could start looking at some of these names. I've been messing around with names like CLR, and I've talked about these over the last few webinars rather, and you know, you have a pocket pit off the 10-day here, and there they go. They're coming off the lows, and we know that things coming off the lows tend to have bigger moves than things that are up at new highs. And so that's what you're seeing. All of these things turn around. Let's look at Silica Holdings. Go ahead, Dr. K.
Yeah, when we say junk off bottom, we mean junky stocks. We don't mean thematic stocks. So if you're talking about commodities, they're down there for a reason. It's not because they're junk. It's just because of the supply demand of where they're at.
It's just a manner of speaking. It's sort of intended to be humorous because in the typical O'Neill vernacular, you don't buy stocks near their lows. You wait for them to make new highs, which in this market is like playing Russian roulette with 5 bullets in a 6 bullet chamber. But you know, so yeah, it's kind of meant more as a joke, junk off the bottom. But if money's flowing into them, I'm buying them, and a lot of these things are starting to gather some momentum, and you can see that in Silica Holdings, for example. You see that in CLR. I don't know. I'm watching the pot on the pullback. Maybe I'm just smoking pot here, but in any case, I'm watching this pullback on an intraday basis, and maybe I'll step in again and come back after the stock. But that seems to be what's going on. I like this other one. I bought this yesterday. Intraday. Here's a nice little Chinese consumer finance company, because the Chinese consumers actually don't have a lot of debt relative to American consumers, I think, in general. They're learning, though. I think they'll eventually catch on to that you can live your life and get by just by shuffling credit card limits around. But you can see here's a pullback here. You get like a nice move off the lows, and then you pull into the 10-day line. So I saw that, take a shot at it. And it's up, 7%, but I'd look to sell into that. They come out with earnings any day, so I don't know when exactly they come out, but I'm not so sure I want to be around when that happens. I'll play a nice 6, 7, 8, 10% move off the 10-day line yesterday and hang with that. So I don't see any questions. We're actually running out of time. Dr. K, you took up all my time. How could you do that? All right, well, let me just go over some other things I'm doing here, okay? I like the stuff stocks, so I've told you about some of those. I'm hoping that this one works. This is now ServiceNow. Look at this ugly V-shaped pattern. It's one of these, they actually have earnings. So unlike Workday and Splunk, I guess, and some other data, which are all in the same group, Salesforce, I think, now has earnings, but it's sort of hanging along the 200-day after this gap, and I'm not really going to pay attention to it breaking the low. I think it's 73.15 or something like that. It's hanging in there pretty tight, so I'm looking for this thing to push out of here real quick. If it doesn't, I may just be gone, and it'll probably take off probably the minute after I dump my position. But I've been playing with it the last few days. It seems to, it's viable down around the 72 level or better, and then it runs up into 374 and pulls back and just keeps doing that. So, but that's an interesting name that nobody's really looking at least if they're O'Neill style and they read IBD, poor slobs, and they probably don't see it setting up here yet. But it is V-shaped, so earnings are out though, so yeah, it could head higher and then fail. So I'm hoping to get a trade out of this, and it's above all the moving averages. So if that's a good thing, then so be it. Is it fair to say that pocket pivots are not working in this market lately? I would say it's not that they're not working, because I think pocket pivots that occur, and I'll give you a good example of a name I've been playing the last few days. Here's a pocket pivot off the lows, and that works. That's working so far. Here's pocket pivot here in CLR off the 10-day line, and that's working. I think it really has a lot to do with where they occur and what action you take after you see the pocket pivot. So for example, in most cases, you want to buy, you see a pocket pivot, you want to hang loose and wait for the pullback, okay? And I also would say don't buy pocket pivots in extended positions. As anybody who bought HA and just sat there going into earnings, or if you do buy, let's say more realistically, let's say if you bought somewhere down here, I think there's a pocket pivot down here, and then you bought again here, and you get a little more, about a 10% move maybe, I don't know what that is, 47. What's that, Dr. K?
You buy HA on the pullback, so you could buy it, at the 45 level, and then you get this nice move. You get a 10% move, actually 10% in a handful of days. So again, you want to take your profits fairly quickly in this environment. But certainly, when it starts to roll over again, before the earnings day, the day before earnings, you want to be out of it on that day, because it's not acting right. I had it earnings, so that's giving you a clue.
Right, exactly. And so, you've got to understand that when you get these moves, you want to sell into them. So are they not working? I think you got to know how to work them rather than whether they're working or not. And if you do, then I think you're making money. I'm watching Facebook now, 118.90, pulling in. I don't know. I may just have to leave this one all alone for now. I like what I've got, though. The pot is not happening. Look at Square. They come out with earnings next week. I think it's Wednesday. But you undercut this low here, you come down into no man's land, and then it just turns around and goes higher and no volume. But, that's what it looks like. So it's pretty choppy, earnings coming up. But that's been a good one since the pocket, or not a pocket pivot, but the breakout right here. This is a standard issue cup handle breakout. You had the pullback. See, you buy the pullback and boom. I think what this has going for it is it's relatively new merchandise. There's not a lot of stuff out there that is new merchandise. Here's this TransUnion, which is a finance company, I believe. They help, I was reading the description that the company has, they help customers limit risk, and I guess maybe in this environment that's a big deal, but you had to be on this one soon. It's way too extended, but it's relatively new merchandise, you know, so, but you got to be careful with new merchandise because here's one that's relatively new merchandise. It's actually working okay from the breakout here, but it's kind of reversing. So I think 5 probably, we were looking at that earlier, that maybe that has a better shot. Also, here's one that's sort of an ugly duckling, is big lots. I don't know, I never really shopped there. I basically do all my shopping on Amazon for everything. I don't think there's anything I don't buy at Amazon. I'm trying to think. If I could get my car washed at Amazon online, I would probably do that too, but I think that's the only time I have to venture off into retail land. And occasionally maybe to buy some shoes. Since you got to make sure that the shoes fit right? You can't just buy them online. So underwear, that's a different story. Socks, shirts, whatever. Anyways, someone says BFPP are working. They are. Okay, here's another one. Under Armour, here's a gap up. I don't know, some of these are beaten down, but it's a Bible gap. We looked at this last week, and the Bible gap up failed. But here's what I look at. In fact, that looks shortable, so you could have scalped it for $1 or $2. But it's filling the gap in here, so it may settle in here, and maybe it's buyable along there. Here's another one. Skechers. You know, this is the formation on the weekly. It looks like it's in resistance land approaching the 200-day, the 40-week. But you had a gap up here, and that's working. So, you know, stuff off the bottom. Maybe let's not call it junk, but it's junk in the sense that it's not something that O'Neill would buy because it's not breaking out to new highs, and the whole world doesn't see it. So, trying to go around. Let's see. What are some other? The chemicals have been doing okay. EMN is one. Eastman Chemical, and you could have bought it. And here's a pocket pivot, I think, or a gap up move here, pulls in along the 20-day, or I'm sorry, the 200-day and the 20-day actually, and now it's going higher. I messed with that one. Agco, look at Agco. I think that's Bible. This is what it looks like on the weekly chart. Oh no, it's going to break out. Well, I don't know. I guess you'd call that a breakout. It's trying to break out, but it's a big double bottom with the second low not undercutting the first low. But I don't think that really matters. But look at this. You know, this might be Bible here. Looks okay to me. So let's all buy it together and see if we can ram it 10 points higher. So. Anyways, what other things? I noticed, you know, the pay, here's one, Verifone. It's kind of pulling into the 10-day. It seems like everywhere I go, I went to the gas station the other day and they installed this new Verifone system, which is sort of obnoxious, but they're installing, I guess it's Arco, and they're putting them in all their stations now, I guess. And once it approves your card, a little TV is on it, and you have Jimmy Kimmel Live and CNBC stuff and other stuff coming on. It's obnoxiously loud, and frankly, when I'm pumping gas, I just like to hear the whirring of the gas pump, and I don't know, it gets to be a little much. But also, I was at the sushi bar the other day, and now they're using a Verifone system. So payment systems are probably a steady growth area. So you might look at that. We know GPN is one that has acted pretty well. PayPal came out with earnings yesterday, and it's gapping up. Think of some other ones here. I know that even FIS, they bought SunGard, which Fidelity National Information, they bought SunGard, which is a payment system, something like that. But you know, Salesforce is also into this space. So is Square. So I think that's an area to be looking at. You might check it out and look at some of these names. I'm trying to remember what even American Express is into it, and it's starting to round out. So. But there's a lot of stuff, you know, moving. Yeah, someone's mentioning, I was going to get there, defense stocks are rocking. Why? I want to know why. Are we headed to war? You got Lockheed, you got Northrop Grumman, you've got Raytheon. They're all, Raytheon's pulling in. They must announce earnings. Of course, some of these are yet to announce earnings. I think Lockheed did. I think the others have. So, you know, something to keep an eye on, but they're suddenly gathering some momentum. So I don't know if those are stuff stocks, other than they are, we will go to war with you to get your stuff stocks. Maybe that's what they are, but they're all doing well. So Boeing is another one. I noticed that last night. You see the pocket pivot there.
You know what, in line with this is our riot gear companies, everything that has to do with riot control. For the first time, well, there's been a noticeable change, say, in spending of governments for riot control gear because they're anticipating social unrest in a great way over the, I guess, the next year or two.
So does that mean Taser is something to look at here? Look at how it's sort of bottoming and sort of filling this gap in here. What do you think?
Yeah, could be this once upon a time, you know, and it did well in the last earnings report.
Maybe it's time for Taser to, yeah, well, it had the gap up, but it hasn't gone anywhere since then. When did they come? Let's take a look at this real quick. We're going over our time, but I know we started late. That's mainly because for some reason Citrix Systems website was coming up very slow this morning. I don't know, did anybody else have any trouble logging on? It took like forever. Earnings are due next Wednesday, it looks like. They're going to make 3 whopping cents. But who knows, maybe that'll trigger a rally. So buy 1,000 shares. The lowest most you can lose is 18 grand. That's no big deal. So see what happens. Maybe it'll gap up. I thought about buying 1,000 shares of Facebook yesterday. And of course, in hindsight, I should have done that. This YRD is still going. So I sold into this jack here, and it's still going. Nice. But anyways, you know, that's what you need to be looking for. So go through all your, you can do that here actually, industries and sectors. So if I look at industries, I can look at agricultural products, agricultural machinery, chemicals. I can look at, keep going down, building, maintenance and service subcontractors, building materials, construction related, all the stuff stock groups, and go through, if you're using HSI, you go through there, or you go on MarketSmith, whatever it is you're using, and look at those groups, and just as an exercise, just go through all the charts and see what you see. And I think you may find there might be some interesting ideas. I know I've made some money with a few of these recently, and I'm continuing to look to buy them on pullbacks if and when that occurs. So last and not least, one that I bought yesterday, Fortinet's buyable gap up here. So it's hanging in tight today. Volume's drying up. They came out with earnings. They actually came out with 12 cents a share. I think they're only supposed to come out with 4, something like that. You can check it. But that brought about a pocket pivot in CyberArk, which is way down there. They come out with earnings, I think, in a week or two. And you've got Palo Alto Networks also moving in sympathy. But this is another beaten down group that maybe has some upside potential. But, you know, I think that's where you try and go. When they get up there and they get too obvious, you know, the workday's been great on this move. I actually bought it here at the 50-day, and that was the big move right there. Since then, it's sort of been like, you know, buy the pullback, sell the move to the highs, buy the pullback, and just channel trading it. Same thing with Salesforce. Has been the similar situation, although it's trended slightly higher. Another one, Splunk. This one's a little more powerful. It gapped up along with Now, and it's holding up and moving higher. So if I had any brains instead of buying Now, I would have bought Splunk, and it's now moving to higher highs. But earnings are coming up at the end of the month, and it's approaching the 200-day line. I think if I had bought it in here, I'd probably be selling it. So, you know, the thing is, you get the nice move up off the lows. Once they start gathering momentum, these are pretty quick, probably because everybody short them, and they have heavy short interest. But with a lot of these, you know, where we're looking at BG, Agco, these are two similar names. These are showing a little more work off the lows as they're trying to turn. And maybe this bull market ends with a big move in stuff stocks. I don't know. Maybe it's going to end now. Maybe we're going to top now. Facebook 118.76. We'll finish off with this, just a quick coverage of what's happening with FB on the 5-minute 620 chart. And you can see that it's breaking to new lows. Volume is continuing to dry up, but it's still, let me take a look. I need my data window here. You're still trading 500,000 shares in this bar. You traded 624. Is that right? Yeah, 624,000 on this bar, and then 581. So it's sort of picking up here on each bar as we're moving down. So maybe it's a little premature, and maybe it needs to set up a low somewhere else. So, but it's still a tricky market, and I think you have to be opportunistic. Yeah, we're breaking the lows now, 118.53. So that's out the window for now. You're looking for a low to set in somewhere, and I would watch the 620 chart to determine that, even, if it is going to happen. It may not even happen. So last question for you, Dr. K. Since VVM went to a rising market signal, will MDM follow? Well, the MDM is on a buy, didn't it? It went to a buy yesterday. Is that correct, or was it the day before?
And so they're consistent right now. As
Yeah.
you know, that sometimes they can be inconsistent because the VVM sometimes will catch a small change in the market, in the risk reward on a small move, whereas the MDM is a longer term mover. But right now they're in agreement, they're in alignment.
Yeah, so check that, Scotty. Anyways, that's all we've got, you guys. We'll just see how this goes. But there's some things out there to look at. I think you have to be opportunistic and somewhat bold, and just don't be willing to chase strength. Look at the pullbacks. Like this morning, I thought was a decent pullback to be looking to buy certain things. Mainly because the pullback, I guess in world markets, they said the sell-off in world markets was brought on by Japan doing nothing, and I'm not really quite sure where the linkage is on that one. So we'll see how this goes. Still early in the day. Anyways, you guys, thanks for showing
Well,
up.
they thought that Japan would would ease monetary policy again, and they didn't. In other words, it's not their contribution to the QE pool was less than expected, and so of course that causes market to sell off.
I see. All right. Well, that's all we have, you guys. Have a great weekend. We'll catch you next week.